Hello and welcome. Thanks for joining us today. I'm Mark Maurer, a reporter for the Wall Street Journal's CFO Journal team. I'm joined today by Dante DiGidio, Vice Chair at EY, and Artie Minson, CEO at Trullion. I'm excited for the discussion we're going to have today about the evolving relationship between CFOs and auditors in the age of AI, particularly over the next 5 years, where there's likely to be a lot of change. So let's jump in. What role do you think CFOs should play in the adoption of AI at their companies?
Thanks for joining us today. It's interesting having been a CFO and now sitting in the CEO chair. Like, I look to our CFO to be somewhat of a unofficial, but I could see it becoming more official, sort of chief AI officer. And the reason for that is what you want to have is basically every function of the company, as Isaac talked about, making sure they're using the best tools that are out in the market to, frankly, make them more efficient. And so I think the organizations who are embracing the tools that are out there, I think that's where the most talented people want to go. When we're recruiting salespeople and engineering people or finance people, they want to know today, like, what's our tool set? What are we using? What are we embracing? And so I think the CFO has to be like on the front lines, not just of the CFO organization of, how am I going to make my accounting and finance and treasury sort of more efficient, but how are we going to run this overall company to make it more efficient? So the CFO has a very, very, prime seat in this evolution.
Yeah, and I would, first of all, thank you for saying my last name correctly. We were practicing that for 10 minutes in the back. I would say the role of the CFO is going to be extremely important, right? And just the fact that the CFO has a lens into every part of a business, I think both will enable the deployment of AI responsibly, but also playing a role in governance of AI, right? And a CFO and a controllership sort of responsibility around making sure that there's good governance around data and good governance around the AI tools being developed and deployed in the organization, I think is going to be critically important.
How significant is this period of transformation compared to dot-com era, past transformations that you've experienced?
I think that's an age comment that we were around for the dot-com era. But, it's interesting for me. My career started at EY, but then I sort of began to navigate through what I'll call like the disruptor economy. And, when I got into cable TV, 80% of viewership was on 3 networks, ABC, CBS, and NBC. And obviously that has sort of flipped, and that was, consumers sort of drove that adoption. I then, spent a lot of my career in sort of the cable television physical infrastructure piece of the business. And, at that time, like, the 4 largest media and entertainment companies in the world were Time Warner, Disney, Comcast, and Fox. They were the big 4, in the world I was in. And they are, somewhat, say it extreme, like kind of shells of their former selves. And the reason is that, the technology moved so quickly and the consumers were adopting it, and we sort of went back and forth of like, can we build stuff on our own? Like, how do we think about that? And so, the speed of which this changes is pretty dramatic. When I left the cable industry 9 years ago, there were 110 million multi-channel homes in the US. There's 40 million today. One of the reasons when we sold Time Warner Cable, we were looking at the time at the data of how much Netflix was being consumed over our cable pipes. And, our brethren on the content side were like, never going to happen. They're never going to disrupt us. It happens because consumers change. And if I take real estate, when I went to WeWork, like at that point, flex office space was 1% of the market. It's going to be 20 to 30% by 2030. So businesses change, they evolve, and they evolve because your consumers and your customers tell you they're going to change. And so for me, when Isaac talked to me about coming to Trullion, I did, sort of having been around the tool set that they've been developing over the last several years, just felt it had the ability to really be on the front lines of like how this office of the CFO is going to evolve, and then how is the key relationship, with folks like EY is going to evolve. And I think that our customers, whether it's a CFO and your shareholders are going to be pushing you of like, what are you doing? Or if I'm a CFO, I'm going to be saying to Dante, like, what tools are you all adopting? So I always sort of go as like, your customers will lead you where you need to be.
Yeah, I would add to that. I think there are a lot of similarities. That the pace of change seems to be a lot more rapid right now, and I think the pressure on executives, I think, is more significant in terms of telling their AI story, their AI journey. Not just what they're doing in their back office and the finance function, but clearly what they're doing around customer, supply chain, and the like. And I also think there's a little bit of a tougher impact today on the workforce, right? Like, what is the workforce of the future going to look like? What are the skills needed to adopt this new world of AI? That feels different to me than when we went through the sort of the last tech boom. And just, I visit a lot of universities, and I think, you talk to students today, and they're just really concerned about, coming into the workforce and ability to sort of adapt real time to what's happening.
What are some use cases, Dante, where you've seen like the greatest increase right now in usefulness and efficiency in auditing with AI?
In auditing?
Yes.
Yeah, so we, Artie and I started our careers in public accounting decades ago, and I used to spend days and days and days crunching numbers and transferring tick marks or going through Excel spreadsheets in gory detail, and that now has turned into minutes. And I think that's one of the biggest changes that we're seeing is the ability to get our younger professionals that do a lot of repeatable work and saying, hey, we can automate that. And we still are teaching them the basics of what they need to learn, but they can now take what used to take days and nights and weekends and get it done in minutes in the background through AI tools. Whether it's tying out hundreds of pages of financial statements, we now have the ability to read code, right? Because we have to understand what systems are doing in terms of processing data. We have the ability to read code using AI tools, which happens very quickly relative to where we were even a few years ago. So I think the speed of getting that type of work done is accelerated significantly, and it's given our younger professionals the ability to, I think, really upskill themselves and accelerate in their career journey quicker than we were able to.
What are some areas within the audit where you see room for improvement in how you're currently applying AI?
Yeah, so the journey, I think, is going to take us to a point where AI is going to allow us to look across significant volumes of data across industries and sectors and clients and really harness the power of that data to bring even more valuable insights to clients in that regard. And not only that, but as you think about efficiency, using tools to really, again, not just do the repeatable work, but start going up scale in terms of the work that AI agents could do in terms of preparing work papers, pulling data from a company's general ledger, doing the initial testing, doing even initial review before a human gets involved. But the real power we see is in the data and harnessing that data, using AI tools to really gather those insights to bring different perspectives to client relationships, and that's a journey we're on.
As adoption of AI accelerates, who do you see as like owning the governance of this application? The CFO, controller, audit executive?
I think internally it'll be a combination of a CFO, a CTO, and frankly a CEO is going to have to be heavily involved in that as well. I think, to Dante's point, like the way, for the last sort of 20 years or so, when you look across sort of functional areas, it was really about people and processes and often sort of paper. Going forward, it's going to be about automation through technology and the ability to basically, as a result of that, make data-driven decisions so much quicker. And so I think, again, the CFOs, the CEOs of tomorrow are going to be the people who have the ability to sort of move in a very facile way across these tools, across a number of sort of the functional verticals that Isaac was talking about.
Yeah, I agree. I think regardless of who owns governance, I think the CFO is going to have to play a critical role in the process. CFOs control and distribute capital to the organization, right? So where to invest in AI is going to be a really important decision because, it's sort of like threading a needle sometimes. I mean, you could try to be very, very broad with it all at once. You may not have the data structured the right way, and that could be a lot of inefficient use of capital there. Or be more focused where you're going to get quick wins and quick hits. And so the allocation of capital, I think, is going to continue to be really important. From a governance standpoint, again, the CFO and the controllership are ultimately going to be responsible for having a control environment around financial reporting and financial data that gets reported both internally and externally. So they're going to have to play a critical role in the governance of how AI is deployed across the enterprise.
At EY, how is governance being carried out as you're experimenting and trying all these new use cases for AI on audit?
Yeah, so as we're building tools, it's really important. First of all, we're selling trust and confidence to the market and to our clients, right? So when we deploy tools, we have to deploy them in a way that we know is responsible, it's going to work, it's going to have the right outcome and output. And so we have very structured processes internally to approve tools before they get deployed at scale. And we're also innovating at the lower levels of the organization, but have a process. We have a CTO organization set up that really is controlling where those investment dollars are going, and then making sure that across our organization, we have 400,000 people around the world, a lot of different service offerings, service lines, and solutions, making sure that we're being efficient in how we're building the tools. So we're not building two tools that are very similar in different parts of the organization. That's a little bit of a challenge, something that we'll continue to focus on. But once tools get built and we want to deploy them at scale, we go through a process to make sure the tools work as intended.
Do you have a sense of what an audit will look like in 5 years? Do you have any idea of that? Because technology is rapidly evolving.
I have an idea. I don't know if it's right, but I do have an idea. I think the audit of the future, there's this concept of continuous auditing, and as companies get better and smarter at their deployment of data technology like AI and being able to get real-time information and insights within their business, I think the audit, as we think about the audit of the future, it's very much following where we think the future of finance is going. And so, we're building the audit of the future around the future of finance, and that means making sure that we have real-time ability to go into a company, look at the data, have observations, do testing, doing it with AI tools, with less human involvement down the road, and ultimately getting to a point where a lot of that work is done throughout the year, more of the work is done throughout the year, as opposed to just coming in at the end of quarter and saying, okay, show me what happened in the last 3 months. And so the concept of the hand in glove and working with finance departments as they evolve, I think will be kind of where we're at in 5 years.
Yeah, from my perspective, it's interesting. We grew up in sort of the generation of these large general ledger packages, and it was sort of the general ledger as the source of truth. Well, the general ledger is really an output of all, as Isaac termed it, the sort of the knowledge layer that's really going on in the company. And so the way I think about sort of in the future is there will be effectively a knowledge layer that sits, frankly, above the general ledger package that has all of your data, all of your insights, all of your analytics. And as a result, that is where the general ledger is sort of the static package. If you really want to go in and sort of what was the underlying unstructured data that drove that entry to be booked, you're going to be able to audit that right out of a knowledge layer, as opposed to a general ledger, which is it's frankly an output. So I think companies in the future really getting their data layer correct and getting all their unstructured data into a structured, auditable format is going to make that the relationship between CFO and auditor, I think, much more robust in the future.
Yeah, I think just to expand on that, I think the ability, as you use AI tools, to show a trail of the flow of data and how data got into the tool and came out of the tool, and the ability to demonstrate what the tool did, I think is going to be really important. To me, I think the journey is going to lead to a point where the CFO organization, the controllership organization, and the auditor are going to have to work together. We are very focused on not slowing down innovation. We want to enable innovation, not only internally. We're constantly transforming and figuring out ways to deploy new technology, and kind of using our own journey as a client zero story to then bring that insights to our clients and say, hey, here's what we've learned around data management, around how to build responsible AI and good governance. And then working with clients to make sure that as they progress, they're doing it responsibly. And I think the concepts of trust and confidence in a world of AI in 5 years, I think are going to be even more of a premium, because we're going to need to trust that the tools are working appropriately and that the outputs are appropriate.
And it's interesting, this will expand beyond just audit. Obviously as a CFO, one of the areas you spend time on is M&A. And, an M&A diligence process of the future will look very different from an M&A diligence process, of the last 20 years. You have the ability now, you go in, you sort of do some sampling, you do some reviews and talk to the auditors of the company you're acquiring. Now you will be able to go in, if we're looking at a company, say, Trullion to buy, we can literally go in and get a summary of every contract that they have, and what variabilities do they have in the contract, what are irregular terms that they have. We can understand their data, and whether it is frankly a jumbled mess or whether it's very, very structured. And so we've been having conversations, for example, with a number of private equity firms who are very interested in using our technology as they go in and they can sort of evaluate a deal up front. One of the biggest sort of costs in looking at a deal is you sort of come to a high-level agreement up front on terms, and then you go through this lengthy diligence process. Well, what if you could sort of avoid sort of those back end where you get into the diligence and then you realize there's issues, that is a massive sort of savings and more efficient and less deals done that don't make sense. And so this will go beyond audit. Obviously, EY has a huge sort of advisory practice in that area, as do all the big four. And we think, again, those are places where our technology can really be at the forefront as people think about deploying capital and on inorganic growth.
I often hear about the importance of having a human in the loop as AI is applied more within the audit. Are there areas of the audit where you expect AI will become so useful and efficient that it would almost be inefficient to have people involved in the process, or that maybe there'll be a quick sign-off, but that the AI will be doing the lion's share of work and sort of certain key aspects of an audit?
Yeah, I don't see a scenario where you don't need humans involved in doing the audit. There's so many things that we do in the context of an audit around. First of all, you have to apply professional skepticism. You have to look for contrary evidence. You have to understand the business rationale and the economics of a transaction. There's these concepts of substance over form or form over substance. Understanding the substance, understanding the intent of a transaction could get pretty complicated, and the nuances, I think, are always going to require some human involvement. So we see AI as really an enabler to elevate individuals to think at a higher level and to come to decisions quicker. But at the end of the day, the human involvement in an audit is going to be critically important. And I think 5-10 years from now, if you're talking to a CFO or CEO, they're still going to have business challenges and business issues that that humans are going to have to help them think about and solve and be creative and innovative in terms of how they deal with those challenges. And I think it's true in the audit and in the finance function.
I couldn't agree more. I think the interesting thing is, I think as you go and you hire in the future, and whether it's at a big four, whether it's at a company, you're going to want to know how facile people are in the most up-to-date sort of products that are out there for that functional area. And so I think it's going to be the people who sort of embrace where the world is going on that, who will be the leaders of the future. But as Isaac was saying, like the thing we all know about AI, but I think a lot of the world doesn't, is like this technology today, and it will continue to improve. It is not 100%. It needs the general sort of horizontal layer AI can be 65% on a contract review. We can get it into the low mid-90s. You need a human element in review, but having again the staff who know how to use those tools, that's going to be the really important thing.
Some companies have been slower to adopt AI than others, in the finance function and elsewhere. How's companies' caution around AI affected the work that you're doing?
Yeah, I think for sure we see companies struggling with adoption, and I think it's this balance of needing and wanting to be careful around the deployment of AI, right around good governance and having a framework so that enterprises know what's being deployed and how it's being deployed, and balancing that with encouraging people to use the technology and to innovate with it and to experiment with it and be curious with it. And that is the balance that I think a lot of companies struggle with. So I think it's a little bit of encouragement to be curious with the tools, to play around with it, to innovate with it, to experiment with it, but doing it within a framework that executives at a company know that things aren't being deployed irresponsibly within your organization.
Yeah, I think the thing that is interesting, the last job I had was sort of a vertical software company, and in vertical software, which I think will be similar to vertical AI, you tend to have one or two winners in a category, because what you don't want, what CFO doesn't want, what Dante doesn't want, is 5 years from now, if you come in and you say, well, we have 7 different AI providers across our accounting industry. We use these guys for order to cash. We use these guys, they help us on revenue assurance. These help us on sort of, contract reviews and data extraction. I think where the world will go is companies are going to want to have a provider who they can look across sort of that entire, vertical functional area of finance or sales. And so I think what you're going to have in a few years is there's going to be a little bit of sort of cleaning up the hornet's nest of people who have providers who are doing lots of different things. And so I think the company, it's as Dante said, like, you want to go fast, but you also want to make sure that you don't wake up one day and it's just a mess of providers all over the place. It's one of the reasons, again, at Trullion, we built functionality that, originally there was a big use case around leases, but our underlying technology can be used across, any real accounting process. And I think that allows us to basically go with our customer, sit with them and say, what areas do you want to AI enable? I don't think the solution is having 6 different providers. And that's why I think there'll be M&A in the space. I think there's a lot of organic opportunities. But again, when you put on the hat of like, what are our customers going to want? They're going to want providers like us to have scale across the entire finance stack.
Yeah, and just to expand on that a little bit, like I think about it in 2 buckets. One is you have productivity opportunities. So you're creating or embedding some tools to help somebody be more efficient. And that could be done, in a siloed manner with an individual. And then you have opportunities, I think, to just redesign end-to-end business processes and think about new business models. And that is much, much more complicated in terms of the deployment, which tools to use, how whatever tool, whether you build it or buy it, how that plugs into the rest of your technology stack. The considerations of that become a lot more complicated. On top of the human element, which is fundamentally changing an end-to-end process or a business model and the impact it has on the workforce. So to me, the small wins are around productivity and efficiency. The big opportunity is around thinking about your business models and your end-to-end processes and how do you really create value that way using the tools.
You talk a bit about the ROI equation, both from the perspective of an accounting firm that's investing, in some cases, billions of dollars in audit technology and training for people, and then also companies that are, the clients, maybe they're evaluating with the right amount to put into this, even if they don't see an immediate payoff.
Yeah, I think of ROI in three buckets. One is economic ROI, and I'm glad you mentioned the billions of dollars we're investing, because a lot of clients say, when are my fees going down? Because you guys are being more efficient. And we remind them that there's a significant amount of investment going in, not just technology, but talent, right? The need to bring data specialists and data engineers to make sure that we're able to really harness the tools to optimize the tools. The second ROI is the impact on quality. And we've seen technology have a positive impact on quality. Our ability to use data analytic tools that have AI embedded in them and therefore look at populations of data and move away from sample testing is fundamentally a better way to audit and gives you more quality. So there's a quality return. And then there's a return on talent, on your workforce. The experience that people get if you're deploying it the right way, your people and your clients will actually get a better experience because you're able to use the technology in a way that will elevate the experience, elevate the information, again, allow individuals to think at a higher level and to come to decisions quicker, to do research quicker, and to focus on the things that they really like to do as opposed to things that are repetitive and mundane. And so, we think about ROI in those three buckets, and I think all three of them we're seeing significant improvement.
The only thing I would add is, I think ROI also, this is not going to be just about how do I take costs out and be more efficient. I think, for example, there's just going to be a lot of opportunities to drive revenue that people aren't, currently probably baking into their models. As someone who grew up in membership, subscription, SaaS businesses, one of the biggest areas you sort of deal with are billing and revenue assurance and making sure contracts are uploaded correctly and there's not variability and there's not terms that don't make sense. And so we're looking at it now, frankly, in our own business and in areas we can be more efficient. So I think you can drive both, frankly, the top line and the bottom line.
Dante, how closely are you following what your accounting firm peers are doing with AI and auditing? Are you seeing there are these use cases, these offerings that they have, or these new use cases, we need to be on top of that, do the same thing, or diversify beyond what others are?
Yeah, I mean, we obviously pay attention to what's happening in the market, but we are more focused on our own journey and really accelerating the adoption of AI, the development of the tools, and again, using ourselves as sort of that client zero example of saying, hey, how have we done it? What are the hurdles that we've encountered? How have we overcome those? And then how do we bring that learning to our client relationships? And that's been really powerful for us because, obviously, again, we have tens of thousands of clients around the world. We process, I think last year, close to 500 billion records of data. I mean, it is unbelievable how much data comes through our platforms across all of our service lines. And so our own journey is informing us on how to go to clients and say, hey, here's what we've learned, and here's how I think you can sort of pivot and make sure you're focused on the things that we've already been through. And I think that's been really powerful. But we obviously pay attention to tools that are out there. We work with Trullion and on things that they're building and deploying and want to understand where the technology is going. Because as I said before, understanding the future of finance is going to be critical to understanding where the future of audit's going, and we've got to make sure they're aligned.
There's a major question as to what entry-level work looks like. And so within accounting and finance, how have your expectations changed for what you're looking for in a recent graduate coming in with what kind of expertise do they have to have? Are there certain things like, a double major in accounting and also data science? Like, where's the bar now for that type of talent?
Yeah, we're starting to see or continue to see really strong talent coming in the doors, and a lot of the students are combining either majors and minors or double majors around a technical area like finance or accounting, as well as a data minor or an engineering minor or computer science minor, because they really are showing the ability to understand that the technology and the technical part of the job are more and more intertwined. And so, that's coming in the door. And then what we want to do is take those individuals and make sure that they remain curious in terms of how the technology is going to impact their ability to do their job better. And so I think the successful professional of the future are going to be the ones that embrace the technology. They're not afraid of it. They want to innovate with it. They want to experiment with it. And the more we could combine those skills, the technology skills and the technical skills, I think the better off we'll be. We're embedding data scientists and data specialists into our teams. So we're not going to a separate department and saying, hey, we need help with this data. And as we do that, we're seeing the ability to cross-skill and upskill our people on both sides of that equation.
Artie?
Yeah, look, I think that from a personal level, I have 3 sons who, all sort of recent graduates of college. And, again, when sort of Dante and I came out, it was like you're either an accounting major, a finance major. If you were totally crazy, you majored in both. I think what you're seeing now are these people who are like going deep into an area like finance or an area like accounting, but they are rounding it out with an information technology, data and analytics, because they're seeing sort of where the market is going. And I think those professions are going to, continue to sort of morph together over time. And so I'll speak for myself. The people coming out of college today are a lot more prepared than I was as sort of a singular accounting major. They're coming with just vast sort of skill sets, and they're frankly looking to companies where they can most use those skill sets. And that's why places like EY are like, we're investing in this technology because they're always in the competitive market for talent. And I think that's going to continue to be the case.
And I think it'll continue to be true that students will come through the Big Four or the accounting profession, whether it's Big Four or outside the Big Four, learn really important skills, and then some of them will stay, some of them will leave, go into industry and take the path that Artie took. And we value the opportunity to teach young professionals those skills and really get them ready for wherever their career takes them. And that's what we continue to focus on in terms of the development and learning.
In 2030, do you expect that companies and accounting firms will have a net smaller workforce than now because of AI?
Yeah, so what I would say is if it were a static world and you took everything we had to do today and just moved it forward 5 years, you're not going to need as much human labor to do that work, right? But we do see opportunities for AI to be a growth enabler, not just for our clients, but for us. We see opportunities, again, I think trust and confidence are going to become even more of a premium in the market. Opportunities to engage with our clients to provide different services around trust and confidence. We see new businesses, new economies developing as a result of this. So in a static world, you would in theory need less people, but we do see a path in 5 years where the economy, businesses are going to look fundamentally different, and we're hoping that'll create even more opportunities for our people. And again, I think what I'm excited about is the experience is going to be so much better than what we experienced. And we experienced some really great things, but we spent days and days and days 20, 30 years ago doing things that felt really repeatable, really mundane, and that's now going away. And so if you take somebody that's 3 or 4 years out of college in 5 years, their skills are going to be so much more advanced than when we were 3 or 4 years out of college.
And I think the advantage EY has is, they're able to look sort of globally across all the companies and different things that they're doing and seeing best practices. But I have a number of sort of former colleagues in here from WeWork or Time Warner Cable, And if we were looking up and sort of saying, okay, how do we adopt AI today? And as Dante said, like, you really want to look at it from an end-to-end process standpoint, not like, let's bring in, this person for this particular area. Like, they are the natural call that, we would be making to a firm who's sort of like, all right, we really want to think about sort of a transformation of our accounting and finance organization. And so I think there'll be sort of massive opportunities there. I'll make a business pitch on Trullion. I think we can be partners to those firms as we sort of go in, and because we're on sort of the cutting edge on AI of like, let's go transform, pick the company, their finance and accounting organization together. Because otherwise people left on their own they're gonna look up and they're gonna have that AI hornet's nest. And I think EY having the seat across all these companies, they're gonna have a sense of what worked really well and what didn't work.
You have a sense of how AI in auditing will help, could it reduce auditing deficiencies? How does this translate to audit quality? Could there be a bumpy stretch in which firms are trying, maybe slip up in how they're using AI, and then eventually there's results? What do you envision?
Yeah, I think part of it will improve quality, and part of it introduces a different risk or an evolving risk. And the piece of it that'll improve quality, clearly, if you have great technology with really good ability to look at data and populations of data, it significantly increases your ability to look at the flow of data within an organization, to understand a business process, to understand where the control points are, where the transformation of data or the transfer of data happens, and to look for anomalies, right? Things that are really hard to do when you're just doing sample testing. And so I think the ability to do that with technology and data will continue to help improve quality. I think the risk that's evolving is, our clients are investing a lot in technology and data and AI, and that just naturally means a lot of transformation. And when you have a lot of transformation, there are different things to think about. How is the company's control environment changing? How's their talent, workforce changing? Have they deployed the data or the AI tools responsibly? Do they have good control over it? Do they and we understand the output of the technology? And I think that, to me, is an evolving risk that we're going to have to continue to think about. So I think there's gives and takes. I think net we'll continue to see positive impact on quality, but we've got to make sure we and our clients are understanding the risks involved as well.
Yeah, it's interesting. We a lot of what we spend time from a customer success standpoint is explaining to our customers up front what these products can do and what they can't do. And by definition, like, it's great. We're at sort of low 90% accuracy, but they are not a cure-all for everything that's sort of going on in your organization. And so as a result, having this of like what it does and what it can't do, I think is really important, and that's going to continue to evolve as these tools get better and better. But people really have to be sort of eyes wide open today that there will always need to be a human element that sits side by side these tools.
What do you want to see from regulators in terms of AI in auditing, and also companies' use of AI, like in the finance function and et cetera?
Yeah, so I would say to date, I don't believe. I think the administration is obviously very publicly saying they want America to be a leader in AI, and so therefore trying to create regulatory frameworks that will enable that. I don't think to date the regulatory environment's been an inhibitor of adoption of AI, right? I think that could happen down the road, but I think it's important for both us as a profession as well as if you're a company or registrant to engage with regulators to make sure that we're communicating. We do that all the time with our regulator, making sure they understand the tools that we're deploying and how they're meant to work, so that when they come in and look at it, down the road, that they understand that what we're doing and how we're doing it and how we're making sure they could trust it, we could trust it. So I do think it'll be helpful as regulators establish frameworks around the use of AI. I would just say, if I were a CFO today, I wouldn't rely on a regulatory framework. Like I would be thinking about how do I make sure that if I have an organization with thousands of people that are using these tools, how do I make sure that I have a good control environment so that I know what's being deployed, what's being used, and whether it's being done responsibly, and then focusing on the data. The data part of this, which we touched on earlier, is critically important. If you don't have a good data set, the tool's not going to give you a good outcome, right? And so all of that, I think, is where I would focus, and not so much waiting for a regulator to come in and sort of give me a framework.
I think, look, the regulators have the same North Star goal, that we all have, which is accurate financial statements with great disclosure. And I think, again, these tools will make that better. I think audits will be more accurate in the future. I think companies' reporting will be more accurate. And so I think, what's incumbent upon us is to sort of, again, work with our regulators and sort of say, like, these are what the tools can and can't do. But I think we all have the same North Star goal. And so I think there'll be pretty good alignment there.
Do you think that AI will help solve or help address the accountant shortage? You have maybe need for folks that maybe the technology can now fill a certain void there, even if the number of kind of new entrants into the field doesn't dramatically increase. I don't know. Is this a way to kind of to deal with that problem?
Yeah, I do, and I actually see some signs of that reversing. As we visit campuses, I was at 2 in the last 2 weeks. The schools are starting to see an increase in accounting majors, but there is a wave of retirements coming in the next 10 or 15 years. I think across the profession, I think AI is going to be very helpful in, again, in freeing up the capacity needed to deal with the stuff that we as a profession are going to have to do, including all the things I mentioned earlier, which is, allowing younger professionals to accelerate in their career earlier and quicker, because they're not going to spend as much time doing the things that AI could help them do.
And as Dante said before, like, these markets are not static. So you could take a large organization and you say, yeah, like, maybe that organization will get more efficient in the amount of accountants we have. The amount of startups, though, that are going to come, all of who need accountants, is that number is going to just continue to take off and increase. And so I think when you look at, what are the number of companies that EY services today versus the number of companies that'll service years from now, I think it's just going to continue to have explosive growth, because these tools allow startups to be birthed so much easier and be so much more efficient than sort of when I first got into the startup game. And so that's going to be the interesting probably mix shift of, like, what percentage of your business is servicing, like, these next gen companies.
Great. Well, that's all the time we have today. I want to thank Dante and Artie for joining us, and thank you all for watching the panel and discussion. Thank you.
I appreciate it.